Hello everyone, welcome back to the Lord of the Coins. Today we're going to cover a few cryptocurrencies and its price action to study and really understand how price moves. This is important to really nail in your exact entries and find areas of interest so that whenever price moves to where you believe it's going to go, you have a key level and entry ready to enter a trade. So we'll cover a few cryptos and we'll go over some recent trades that we've hit in our Discord. We're going to look at some trades that we're looking at and some trades that we also missed. So yeah, let's get started here. So I do a lot of these analysis live. So definitely, I might be making some mistakes. So if I do, make sure to leave a comment and let me know, and I will definitely get that fixed and post it onto my Discord. So yeah, and if you guys like this type of content where I just kind of go over these trades live, let me know, and make sure to leave a like and a comment, and yeah, just let me know so I can do more of these. Alright, so let's get started. So I'm going to start with Bitcoin here. So when you drop in price like this, when you have a lot of impulse moves, you end up forming ranges. For example, this big drop that we had recently from about like 21 to like 15.5. Afterwards, we formed this range here. So you can see this whole range. So we have the premium zone, which is the top 50%, and the bottom zone, which is a discount, which is the bottom 50%, and then you have your mid-range, which is just the center between the two halves. So right now we've just been kind of accumulating in the discount zone, and when you see this range form on the bottom side of discount zone, this is just accumulation before a move back up, or possibly move back or move down. But usually when you form these kind of ranges, it's more likely that you will go up. So if you were to hedge your bets, it's just more likely that price will go up since it wants to be back into the premium zone. This is just where a lot of liquidity is left over. For example, like after this big drop, you can see that price goes back up to fill up the rest of the orders because there's just more liquidity. There's imbalances that need to be filled. Yeah, just understanding imbalances is really, really important because markets are run on liquidity, and when you understand the fact that markets are literally just run on liquidity, you get a really good feel for how they move. For example, let me show you. So when I say imbalances, I just mean like these gaps in candles. So you can see that we have a large white candle right here. Let me zoom in. And there's a open space in the body, right? Between the bottom candle wick and the candle wick above it. So let me highlight it with the rectangle. So like this is what I'm talking about. Let me make this gray here actually. So this wick from the bottom candle only goes up to around this much of this candle, and the wick of the candle above it, this black one, only goes down here. So this portion that I've highlighted in the gray box of this candle, this is known as a fair value gap or an imbalance. When you form these, more often than not, I would say like 90% of the time, if I had to put a percentage to it, they end up getting filled. So you can see that after we create this imbalance, price fill this gap perfectly with this wick. If you see here, we have another gap right here. If I go over to the side, you can see that this wick right here pretty much covered it perfectly. Down here, we have a gap right here, hasn't been filled yet. So that kind of leads me to believe, hey, this is probably going to get filled. A lot of times you'll just see a ton of fair value gaps like this, just all over. On my charts, it's these gray boxes that are fair value gaps. So, if you were to ask me, hey, there's two fair value gaps, which one's gonna get filled first? I would likely, it's definitely hard to say. So since this one's above and we're on a discount and we want to go up, right? So you want to say, hey, the likelihood that we go up is more likely that we go up, right, before we go down. I say maybe not more likely before, since there's liquidity left down here. When there's still a lot of liquidity left, market makers want to sweep you out before they go back up, and vice versa. If there's a lot of liquidity left up here for people who went short in the market, they want to wipe them out before they come back down. So when you're in a zone of just high liquidity like this, so ton of relatively equal lows and, you know, this fair value gap, I would be more inclined to think that we'd see down before we see up. That is just kind of how I see the markets and how I view price action. So yeah, so if I were to just kind of give a scenario out, price actions, it's hard to really predict precisely, but you can get a really good general idea of where it's going to go. For example, here, a lot of liquidity. There's a lot of confluences in this area. There's a 15-minute broken base. This is the VWAP, the weekly VWAP, lower standard deviation. We have an imbalance down here, more relatively equal lows, more relatively equal lows. When you have all of this, the likelihood that this gets swept is really high. We definitely could see just up and then we clear these later, but if I were to give you a couple scenarios, I think we would maybe come down here, maybe bounce off this trend line. We'll probably get like a wick, we can get like a really big wick down here to clear this fair value gap and then move back up. That's definitely possible. Yeah, but these are the likely scenarios. So instead of predicting exactly where you're gonna go, have these levels drawn out so that and you set your alerts. As you can see, I have like 4 alerts down here, and I have 1 up here. So you kind of want to have these charted out. Instead of trying to predict the market, just know that when price ends up going here, you know what it's gonna do. That's how you snipe your entries. So you don't want to be like, hey, I know price is going up here. You want to be like, when price is up here, this is my exact entry. That's how you end up getting a very, very high win rate in the market and a lot of entries. Because if you do this for many charts, set your alerts, you end up getting alerts like pretty much every day, and you just enter a lot of high confluent traits, and you just end up having a high win rate just by doing that. So yeah, I wouldn't say it's easy, but it's simple. So there's a very big difference. It's not easy, but it is very simple. So yeah, that is kind of my outlook on Bitcoin at the moment. We are in this discount zone, macro discount zone. So I do see us entering this premium zone relatively near in the future, maybe in December, maybe late November, early December, late December. We can see accumulation for a lot longer. So, and the longer the price accumulates, the more volatile the move. Although I did say in my Discord, I think that we are going to see a volatile move here soon. Price is coiling rather quickly, so we're gonna probably see this and see, some sort of volatile move. So definitely be careful. This is why sometimes you don't really want to have limits set, as especially price action during the weekend could be really volatile, unpredictable. The only limits I would really set are limits on Bitcoin down to like 10K or below, just because if price ever goes down there, it's not gonna be down there long, in my opinion. So those are the only limits I would really set. And instead, when I enter trades, I enter on my strategy of sweeps and changing characters. So for example, this is a sweep where you have people who went long too early. Market makers will sweep you out, then people FOMO, and then price comes back down into the zone of demand, and this is where market makers re-enter their positions since they have a lot more liquidity that they want to get in. And if there are more orders from market makers down here, then we're definitely going to see price get manipulated down to pick up their orders. So keep that in mind. Never FOMO, it's never worth it. Just say you missed a trade on Bitcoin here, there's 1,000 other coins that you could find a similar entry on. So yeah, just don't FOMO. So other tools I liked to find exact entries are the Fibonacci tool, the Fibonacci retracement. This is a tool that a lot of the algorithms use. Usually when you're trading against a lot of algorithms and bots. So using some of the same tools that they use is it gives your trade high confidence. So yeah, so this short entry that I'm looking at on Bitcoin is that we'll fill this fair value gap, possibly wick past this point of liquidity right here. There's probably a lot of liquidity right here and relatively equal highs. So we could see price pretty much come and fill this order block all the way to the top here and then reverse back down. We can even see price literally just fill this fair value gap and then hit this golden pocket and come back down. I'll show you another example of that, another coin that we're gonna cover. But yeah, really simple stuff. I feel like you don't have to really overcomplicate things with like hundreds of indicators. Just know where your zones of demand are, know where your liquidity is, know where your imbalances are, mark out your key levels, know how to trade ranges. If you can like visualize that really fast, or accurately, I guess you could say, it makes nailing a lot of these entries just so much easier. So yeah, just a few tips and a few secrets that not really secrets, but a few things that I really use to just find my entries into trades. So we'll cover a couple more. So we'll go to Matic here. So on Matic, we've had a lot of so we had this accumulation, this manipulation to get smart money in. Then you have the markup into the distribution. Then we have another accumulation phase, which was the distribution, into another manipulation, into another distribution. So, and I'm sorry, that was a lot. But in terms of Matic, this is the entry I was looking at. There were a lot of confluences in this area. But unfortunately we never got here. I think there was just a lot of bullish news on Matic with the whole partnership of Starbucks and Disney, and I think there was another one that got announced. I forgot what company it was, but I heard it was pretty big news. But yeah, Matic's just a really good coin. It's one of the coins that I might just keep on, mooning. So, but that's why. But you don't want to FOMO. So I have my levels drawn. I'll probably update these in a little bit, since I think I drew these back when price was like around this area. One was just like in September, so it was a while ago. But yeah, if price ever does come back here, that's what I'm gonna look for, and this is where I'll find my entry on Matic. So, and when I find my entries, you know how I said I don't set limit orders? What I look for is a sweep, a change of character, and then move up. So, sorry, I drew that bad. So this is what's known as a sweep, is where, I think I kind of explained this, but I denote it by X in my charts. So if you see this in my charts, this is what this means. So anyone who went long a little too early, they went long there. Market makers will wick you out, and then this is known as a change of character or a broken base. BB. I denote it by either BB or by Y. It depends on the charts sometimes. And these broken bases are also really good zones of rejection too. So let me actually show you guys that real quick. So I'm gonna change the chart, not this one. I'm gonna change the chart to XRP. I'll give you this really good example. So when XRP was trading back a while ago, kind of high. So it's back in this area. This is known as a broken base. I probably have to go to a lower time frame to see this. So this is really good stuff. Let me show you. I don't know why this looks like this, but so you have your sweep, and this is known as your change of character right here, where this gets broken. Why? The thing is, when you have sweeps and change of characters like this, they're really good zones of price rejection. As you can see, boom. Okay, it's not exactly there, right on the mark. That was my entry, and you can see that this was, literally a picture perfect trade. You're just right on the dot. So identifying these broken bases are, really helpful and good confluences to your trade. So let me go back to what I was looking at. Oh, Matic. So in terms of Matic, so yeah, that's what your broken base is. And this is how I enter my trades. I'll never set a limit. When you have a sweep and a change of character like this is your market maker demand zone, or your order block. And once you have your order block, you also end up getting your broken base. A lot of times you'll see either rejection right off the broken base, or you'll see a tap into it before move up. This is how you confirm bullish order flow. If you get this sweep, change of character, and then tap into the zone of demand, you're in bullish order flow. And you can see price go up. Vice versa, if you see it the other way, get your sweep, change of character, your sweep, change of character, you can see bearish order flow once it taps into demand again. So yeah, really good stuff to note. I definitely either save this video or write that down, because that'll save you a lot of losses on getting stopped out of your trades. So I'm gonna go to Algorand. This is a trade we hit here actually. So I saw Algorand, I think it was around here that I said it in my Discord. We're kind of forming this rounded bottom, and rounded bottoms are literally one of the most lucrative and best things to trade. When you get rounded bottoms like this, you'll see parabolic moves. So in terms of Algorand, I'm seeing that right now. So in terms of profit targets, you can probably target these relatively equal highs. That gives you a RR of 35. Insane. So yeah, if you guys wanted to get in on this trade, we already found like an entry in the Discord, but we can definitely see another tap into the zone of demand. So let me show you guys. So we filled this order block right here, but like I said, you have the sweep. So you got your sweep right here, then your change of character, and you can see price come back down to fill a zone of demand, and then you have bullish order flow. But we kind of already have that right in here. So you have this sweep, change character, and right here was your entry, and we have bullish order flow. But there's a chance that it can give you another one. So if you do see price come down to like maybe like 27 cents, you might be able to find another entry in. But yeah, this is a trade we're in, and this is how we find our trades. Zone of demand, fill of imbalances, sweep, change of character, fib levels. This hit the golden pocket. We use VWAP a lot. I think VWAP is one of the best indicators out there. Yeah, sweep of a lot of key levels. So just understanding, a lot of this simple stuff will help you nail a lot of good entries. There's a lot more stuff you can do, a lot more things I look for detailed execution, but just on a macro scale, how to nail your entries, how to land like sniper entries. This is how you do it. So let's go over quant. This is another one I want to look at. So I did cover a video on this. So in my video, yep, I saw all my drawings. In my video, I said we'll see up before more down, and we definitely are seeing that up move right now. We're seeing this right now. So now that, we actually missed our entry into this. So this is one of the ones that we missed. There were a lot of confluences in this area. This was the previous week value area low, so I thought we hit around the value area low before going up. On top of that, we have our broken base. This is also the low on the range. This is a Fibonacci golden pocket. But it turns out the only thing we did was we filled the imbalance. So if you draw this fair value gap out, fill the fair value gap perfectly, and then we're on our way up. So unfortunately, we didn't get picked up on this trade. This would have been a really good trade. Yeah, unfortunately, but there are a lot of zones of demand up here up here. So you can see price kind of maybe come up here. I don't think it's gonna go. I think pretty sure I said in my video I don't think it's gonna go up here. We'll probably just hit this and come back down. But never know. Quant is a really good project, so there's a chance that this can just moon. because it did this when the market was doing kind of bad. So yep. So this is my view on quants, and another sniper entry that I'm looking for on this crypto is the fill of, or the sweep of all this liquidity down here, because there's a lot of it. We have another fair value gap that we want filled, and a large zone of demand down here. So definitely be watching this, as if it ever gets down here to this around like $63 level, you'll probably see another large bounce up. All right. Yeah, those are pretty much all the ones that I really wanted to cover. If you guys like this type of content, make sure to leave a like and subscribe and drop a comment for me. And yeah, make sure you join the Discord, as we go over trades like this pretty often. Let me know if you guys like this more impromptu style of analysis, as I kind of want to show you guys, just kind of raw on the charts, just how I analyze and think your charts. So yeah, if you guys liked it, let me know, and I'll see you guys next time.